Welcome to the Swing Trading with Cycles channel. It's January 9th, 2023. We're going to cover natural gas today. It's the second full trading week of 2023 and natural gas is bouncing. In fact, I would go so far as to say we have a short-term bottom. And that's an important distinction. Keep in mind that every long-term bottom is by definition a short-term bottom to start. And then you need more evidence. You need follow-through on higher time frames. And then obviously it becomes a long-term bottom. But obviously, some short-term bottoms don't get there, right? If you're new to this channel, know that the central premise here on this channel is that prices trend. Because prices trend, we can use price action to analyze that trend to understand, are we trending higher? Are we trending lower? Are we in some kind of range, actually? So we're consolidating. We do that on multiple time frames. That allows us to put ourselves on the right side of the trend. That's why we've been bearish natural gas pretty much all of December. If you've been watching the previous videos, there'll always be a link, a pinned tweet, a pinned comment with the past videos and also other background info like cycles analysis, understanding swing lows, understanding swing highs. And speaking of swing lows, we have a big, beautiful swing low so far. Obviously, the day hasn't closed yet. We're here almost at 1 p.m., but this is looking pretty strong, right? And as we talked about in the previous video, what we needed to do was trade above the high from Friday, right? Because Friday, January 6th, marked the low at, $3.52. And so we needed to trade above the high from that low candle to form a swing low. A swing low is how an uptrend begins, which is to say you want to buy after swing lows, right? You want to buy as soon after a swing low as possible. And we'll talk about Boyle because it actually gave us a chance to get in this morning, which was awesome. It was kind of a gift. Great risk reward. And so as long as we close above that high, what is that? At $3.84 essentially, and we're obviously up here above $4. We're clearly in swing low territory. The next move would be to form a weekly swing low. That's a bigger task because we need to get above $4.40, right? That's this candle. And so that's the multiple time frame analysis, folks, right? You get a move on a lower time frame. If there's follow through, it creates a move on a higher time frame. So now we're talking about this daily swing low that we have, potentially creating a weekly swing low. And again, we need to get above $4.40 to make that happen. It's not subjective. You don't have to squint your eyes to see certain patterns. It's just math. Do we get above 440 or not? And if we do, can we stay above that? And just to be clear, we can always spike below a level. As long as we recover it, that becomes a false breakdown, right? And so as we think about the cycle count though, so Friday was day 21. So this is possibly day one of a new daily cycle. And obviously the other scenario, we had this huge move down. The other scenario is that this is just another lower high. And we're actually going to make our cycle low later in January because this is kind of short for a cycle low. That's important to notice. Now, that said, we did have this cycle low that happened on day 21, but then we had this really quick, really short bounce and then a massive decline. So this isn't super auspicious as your model, but then you had this 24-day one that led to an 11-day rally, right? So 21 days isn't crazy, although you have these that are more like 30, 37, 39. So we're going to have to, as with everything, you really want to make sure you're using stops. I see people in the comments that are down by a lot in things like Boyle. None of this is ever trading financial advice, but especially with something as volatile as this, you have to use the price action to set logical stops, right? You would want to set your stop below the last swing low. So below this high. At this point, it's a little late to be getting in the trade because the risk reward has shifted. So that's your weekly picture. The other thing you want to make sure you understand is, are the candles on the higher time frames green or red? Are they making lower lows or are they making higher highs? So this is your monthly candle. Is it green or red? It's obviously red, right? But it was much redder, right? Because this lower wick that's building here is that rally that we're seeing today, right? The swing low on Friday. That's what's creating this wick. And most importantly, this candle opened at $4.40. That's not a coincidence. That's the high from the weekly time frame, right? It's all connected, folks, because it's all the same price action. And so getting that weekly swing low would also turn the month green. And what kind of monthly candle would this be? I mean, I think it's pretty obvious. It's going to be a hammer, right? Like, think about that, right? We know that price opened here and it dropped all the way down there, and now it's recovering. Once it gets back up here, which again, this is $4.40, it would go green, and you get something like a green bullish hammer candle. Very, very bullish. Now, it could also completely roll over again and go back to the lows later. We have to be prepared for either scenario, right? And as we think about the longer term like context, we have a top on month 26, right? And so this is a 26-month rally. And then we have the decline for 5 months. This is month 31. So it is possible that this is, so as we're thinking about it, maybe this is our daily cycle low. Maybe it is also our long-term cycle low. And we'll look at what that looks like on the weekly. But what we would need to see eventually is a candle like that would cross above the high from this candle. So we would get a monthly swing low. Now we're obviously a long ways away from that. I'm talking about this candle being like in February, obviously. But that's how you want to start to think in your mind's eye what would need to develop for kind of a longer term picture. On the weekly chart, if you think about the weekly cycle, it's an interesting spot here. We had which looks like it was just a short weekly cycle, but bearish, 7-week rally, 11-week decline, or no, 9-week decline, excuse me. And then you had this feeble 4-week rally. And then what is that, week 5, 6, 7, 8, 9, 10. So this is week 10, or you could interpret this, as we've been talking about on these videos, as this is actually a 26-week cycle, right? That goes from this swing low to this swing low. But again, we would need to cross above 440 to confirm that swing low here. In some ways, it doesn't really matter. Once we get this swing low, we know we're starting an uptrend on the weekly chart. As I said, a swing low is what starts an uptrend. A swing high is what starts a downtrend. That's the swing high on the weekly that started the weekly downtrend. That's the other swing high from the previous weekly cycle. So all that to say, if you use the lower time frames, you have a nice entry, and so you'd really just be looking for more like confirmation at these higher time frames, and also potential resistance, right? We may see some supply show up around 440. Maybe that's where price pulls back hard. That might be where one might control risk, take some profit if one got long earlier. So we could be starting a new daily cycle, weekly cycle, and maybe long-term cycle. That's super exciting. Now, I'll go through that false breakdown pattern on the yearly chart that we talked about. I'll get rid of all the drawings. Let's hide all this stuff. So as we talked about, right, these are yearly candles. Each year is an entire year of price action. We have this low here at 363, approximately 364. And of course, we broke below that. We know that the bottom tick was like 350 or something, right? And now we're reversing higher. Again, we obviously haven't gone green yet. So you're thinking big picture. So yeah, interestingly, we're so early in the yearly candle that by going above $4.40, the yearly candle will go green. Of course, we have a ton of year to go, but this is just as you're thinking about the highest of the highest time frames, that like this could be a big move that's kind of brewing. And so you want to keep all of that in mind as you're in the trade potentially. So let's look at Boyle first. That's obviously the way we would play it bullishly. And we talked about so that is our weekly cycle sort of counts. We'll look at a slightly different setup here. So this is a little bit more detail. This is more of an active trading sort of layout, if you will. So this is Boyle. And as I said, so like just to orient yourself, this upper left-hand corner here is a weekly. The middle is the hourly. This is a 15-minute next to that. Beneath this is a 15-second. I like to use that for something wild like natural gas. I kind of toggle this between 15 seconds and some other time frames. This is 5 minutes. Sometimes make it 3 minutes. And this is your daily. So the weekly is really just meant to let's just keep the big picture in mind. So big picture, we're just an inside week. I'll zoom in here, right? So Boyle is just an inside week, and I think we talked about these levels in the last video. But our high from last week was $15.73. So that's a nice upside if you were able to get in around the 12.5 area or something like that, right? And so you might expect some resistance there too, like just to be clear, right? You want to make sure you're playing it both ways, that you understand you're kind of looking for both sides of the scenario. Also notice there's a gap on the weekly, like up to 17. So that's really interesting, right? In terms of just kind of risk reward. And on the daily, we have a swing low just as we do. Let me put this back on auto. We have a swing low just as we do for natural gas itself. And again, Boyle, this is a leveraged ETF, so you want to be careful. This isn't something that you hold on to too tightly. You know, it's a trading vehicle, right? And let's just think about what was the last little rally that Boyle gave us. So like this little one that obviously failed to a lower low. That was 64%. And what have we done so far here? 23. Now that doesn't mean we're going to get a 64% rally as a guarantee. Never. Like that's not the right way to think about it ever. But it just kind of gives you a frame of reference. That was 73. I mean, this one was a little bit tough to stay long because that was a pretty rough back test, but that was 69%. All that to say, we're relatively early in terms of percentage gain, and obviously this is potentially day one of a daily cycle. So even if we're going to get an early top, like day 4 or 5, this is still just day one, right? So that's auspicious, right? Now, in terms of just understanding, like if we look at the 5-minute chart, right? So we gapped up this morning, right? And we opened at $12.83, right? And then we kind of consolidated here. And then this was our big move up, right? And so really, if you were conservative, you could take the trade right around $3, like really conservative, because you have this area sort of beneath you. You kind of set your stop like somewhere like here, right? The 1280 area, right? So that gives you like 30 cents of downside, something like that, right? Or you could be aggressive. You could have gone in here, right? Once this makes a higher high. There are different ways to play this, especially we're talking micro here, but there's an entry around the $13 level, right? And so we're up here at 14.23, and this is your 5-minute chart again. So you can see we make a lower low here, then we consolidate here, or excuse me, a higher low. This higher low holds, and we're really kind of consolidating basically since the 10:35 a.m. candle. We've kind of been just kind of going sideways. So it's going to be interesting to see if we can get a breakout going into the back half of the trading day. And like in terms of controlling risk, if you're really conservative, you know, a stop somewhere below 1363 would be appropriate. I mean, you can see this structure here, right? It's pretty clear, right? Like you got this move up, and now we're kind of oscillating here. We'll see what it wants to do. Again, thinking about the bigger picture, it does look like we're probably in a new daily cycle at least. And so that's the move on Boyle. So that was your level. 1573 is your weekly. That's important. And let's look at Boyle for the monthly chart, because that's the other important thing. Where does it go green? And I'm assuming it's the 1573 level, right? And that's also because of where the week started, and we opened on the highs, and we just kind of cascaded lower. So that would also turn this monthly candle green. So that's important to know about. But again, this is a trading vehicle, so be careful. If we look at UNG, that's the other bullish way to play this thing. So that also pretty clear swing low. This is actually closer to making a new high on the weekly. That's interesting. That would be at 1341, and we're here at 1306, right? So right there. Oh, there. The levels have returned. I was hiding. So that is UNG. Let's look. What about the monthly? Oh, well, so that's really interesting, right? UNG is front running natural gas itself, because natural gas is not, let's just confirm that, right? Natural gas is not positive on the month yet. Yeah, it's still got a ways to go. So that's interesting. UNG has actually already gone green for the month. That's telling you something. And the low for UNG is 1162. 1162, and you're up here at 13. So that's not a great risk reward to set your stop down there. You'd really have to go, a little bit more micro. Again, this morning, I think everything kind of gave a little bit of a chance. And obviously, you could have been long since last weekend, like since Friday, but there's definitely obviously a lot of weekend risk. And let's just look at cold, which is obviously going to be doing the opposite because it's a bearish natural gas ETF. But we want to it's always good to get that confirmation. Okay, so we talked about that in the last video, right? Nice. I mean, look at that clean swing high. It opened literally right below the low. Like that's kind of perfect price action right there. And we're about to come down to that's your 10 period moving average. This is your daily chart, by the way. And of course, What we want to see is a weekly swing high, which we're getting. Yep. And we want to see price close as this weekly swing high. So that would be below $30. Well, wait. Yeah, so below $30. So we're actually just a hair above the low from last week for gold. We're at $30.24, and that low is at $30 even. So you'll want to kind of watch that level again, because it's just good to have this triangulate. Like, okay, yeah, this is as bearish as I was expecting it to be. If you're inclined to go long natural gas here, or you already are because you already took the trade. Because again, the risk reward was there. Taking out that multi-year low, that 360, 350 area, that was important. And the last thing I'll say, just to clarify, is it's not about, well, we got to that level and now boom, everything is great. It's more like, how does price react when we get to that level? And clearly price bounced, right? Like we saw it in real time, and that's what you want to do. You reserve judgment and just see how price behaves at that level. And so this is definitely going to be interesting to see how far this can go. We're going to prepare for either scenario, and that's why I think a trailing stop is actually quite appropriate. That said, man, this thing could be a bit of a rocket ship, so it's going to be an interesting move. I'll continue to give updates on this channel. Thank you for watching. If you haven't subscribed, definitely consider, and please like the video. That helps others find it, just helps for broader exposure. I'm really trying to help people not lose money. That's the most important thing, understanding an objective way to look at the markets so that you're putting the odds in your favor, right? Not the other way around. So thanks for watching again.